Hi, my name is Eric Burkholder, Senior Advisor and Founder of Burkholder Wealth Management. We're creating this video today to do a quick recap of the 2024 markets and talk about current market conditions and maybe what we can expect coming forward for the year of 2025. So 2024 was a good year for the markets, really led by the U.S. market, the S&P notching nearly 24% for the year. Everything positive, but in the fourth quarter, we had a pretty big divergence between U.S. And international. International had a negative fourth quarter, still eked out positive gains for the year, but just marginally compared to the U.S., which is almost double digits across every asset class in the U.S. Good year for the markets overall, but leading into some interesting current market situations. So obviously, everyone's very well aware we had a election in November, and there's much uncertainty about policy and things going forward, as well as some interesting things going on in the market. So I'll just start to kind of point out some situations in the market that are historically interesting, and that's some valuations around the U.S. market, specifically around U.S. large companies and the tech part of the market specifically. The S&P 500, as I mentioned, one of the top performers in 2024, but we also are now in a situation where the top five companies in the S&P 500 make up a larger percent of the index in history. And so, the likes of NVIDIA, Apple, Google, Microsoft, and Meta are really driving the return and risk for the S&P 500. And, history would tell us that's not necessarily what we want in a healthy market. It's good while it's good, but it can certainly turn the other way quickly, as we saw this week when some news came out from China about DeepSeek and some competing AI, and we saw a significant pullback in NVIDIA. Some other information around the valuations of the U.S. market, the relative valuation between the S&P 500 and international markets is as wide as it's ever been. Mostly because the U.S. being very highly valued, the S&P is still trading at 30 times price to earnings. And again, it's very hard to predict how these things will unfold in the near term. But we do believe in disciplined investing, and we think valuations ultimately do matter. And so certainly nothing saying that a pullback is imminent, but we definitely are monitoring valuations in the market, and we always try to make sure our portfolios at least have a fair valuation. We feel more confident when we're investing in a portfolio that is trading at relatively fair valuations. Another last interesting fact I'll throw out there is that if you actually take NVIDIA out of the S&P 500, then European stocks outperformed the S&P since 2022. Again, these are somewhat anecdotal tidbits here, but I think it just shows that we really need to be careful about getting too caught up in one index, especially when a lot of money and a lot of money is chasing returns and valuations start to get high. And so that's kind of the 2024 background, current situation, and now the big question on everyone's mind is what's in store for 2025. We just had an election. The new administration's already putting into practice some of the promised policies. And so first I'll say we're really data-driven here, and the data would say it's extremely hard to predict how an administration in an election year will affect the markets going forward. There's really not any solid evidence that we can say, well, Republicans are business friendly, so oil and gas is going to do better, or lower regulations are going to be a tailwind to U.S. companies. I mean, those stories do make sense, but they just don't bear out in the data because there's many other factors that affect the market. A lot of them are macro and global economic factors that just, as much as the politicians want you to think otherwise, they just can't control all that. Oil and gas is a perfect example that actually did much better under the Biden administration than the Trump administration. You would have never bet that going in on the front end. And of course, I'm not saying that Biden gets the credit or Trump gets the blame. We had a pandemic, in between there. So But it's just a good example of it's very difficult to bet on how an administration will affect the market going forward. Now, there are some certainly unfolding economic situations, or I guess political situations as well. People are talking about tariffs, and certainly there's really no way else to look at it. Tariffs will increase prices. Virtually one of the few things economists can agree upon is that tariffs will raise prices. Now, we can debate how that plays out, and maybe it's good for the long term because it protects U.S. industry. Those are all, again, things for the future, but tariffs increase, a significant increase in tariffs would certainly increase prices. Probably in the short term would not be good for the economy and the markets. So again, it's just hard to balance all these different moving factors. And we would take the position that your investment strategy should not be based on who is in office and what policy they're implementing. Again, it's just too hard to predict how that will ultimately ripple through the markets. The Fed also met recently, indicated that they're still slowing their trajectory as far as lowering interest rates. Again, it's very difficult to predict how interest rates will move. We had actually end of last year when rates were lowered, we actually saw long-term mortgages go up slightly. So again, the Fed and the short-term Fed funds rate is only one factor of the market. But it certainly seems like inflation sticking around, although it is lower, and that an aggressive rate cutting situation seems unlikely. A lot of uncertainty, but really what we preach here as far as your plan and your investments is to create an investment plan on the front end that can withstand the uncertainty and the things we know are going to be out there, which we know there's going to be pullbacks. We know there's going to be a good and bad policy coming out of Washington. And we know all those things, and we can't control them, but we can control your risk profile, your plan, how you're invested, and if you do those things, we don't have to worry about the things outside our control. So we certainly hope 2025 is going to be another positive year. We're monitoring the markets, monitoring the portfolios. Like I said, we're making sure we're prepared in advance for anything that might be out there. We'll continue to keep you guys updated. If you have any questions, as always, don't hesitate to ask, and we hope to see you at the next video.